Once again, I want to see this wick worked in, at least the midpoint. So let's see what that looks like. Now let me get it 100% accurate. There we go. So in case you guys haven't noticed, my kind of color system is every time I'm using wicks, it's always this light green. Anytime I'm using order blocks or breakers, it's blue. And then anytime I'm using inefficiencies, it's either this tan shaded box here or red. And no reasoning behind it, it's just kind of what I do, I don't know. So really no reason for dollar index to have any significant retracement unless it wants to just tap one more time down into this breaker and then the high end of this inefficiency and then go for the buy side. But for now, I think it's more likely that we just see it go straight up for the highs here. See how it just engineers that in there, trades up to it, slams off aggressively, and likely towards the end of the day we'll see pricing back up above those highs. Obviously in trading, things can change real quick, no matter what it is you're talking about, but if not, no big deal. We'll just wait for that 9:30 open to come into play. At the 25% of the wick, and boom, there is the dollar index going for those highs. Beautiful. So like for the average speculator, this is like a classic kind of sucker move. So let me go to 15. It trades up, matches the highs, slams off aggressively. They're automatically thinking, oh, wait a minute, this is a strong resistance. So I'm going to go ahead and get short, aim for the lows here, and put my stop above here. And what do? They drive it down. Notice how they reached the high, drove it the whole way down here. So we closed here, opened, drove it the whole way down here, and then boom, buy stop triggered. But yeah, not that this isn't really important to your equity or whatever, or your learning or anything. If you guys were wondering, my largest payout of 2023 was, I like to say 10K because it sounds better, but uh, after it was all said and done, it was about just over $9,000. I have that posted on my Twitter. So that was my largest payout of last year. And this year I'm anticipating to double that. But yeah, we'll stick to the process here. My largest trade of last year, believe it or not, was actually for the 9K. Uh, honestly, I wasn't going for like home runs and stuff. It was just building up over time. You know what I mean? Just like what I'm gonna be doing here. So exactly what I did last year is what I want to do here. And what I would have done differently with that payout is I would have, in all honesty, I wouldn't have taken the payout. I would have just kept building it up. Because as soon as you take a payout that big, I mean, it basically just closes the account. And I mean, whatever. At the end of the day, the prop firms are here for us to, or the prop firms are here to take our money, not for us to make it. So, I do miss trading forex sometimes, but I mean, I'm content with the indices. They served me a lot better in my career, but I do miss trading the pairs sometimes. Matter of fact, let's go ahead and pull one up, just because I don't see anything I want to execute on right now. Let's go ahead and pull up forex. It's been a while since I've been on these charts. In all honesty, it really has. All right, so basically it looks the same, honestly. Just a little bit cleaner of a upside move. Didn't quite tag the high there. Okay, so kind of just stuck in a consolidation within this imbalance. And then we have, and this up close candle just fell shy of it. So 90% of the time, well, I guess not 90% of the time, but most of the consolidations on the daily time frame you'll see will reside around equilibrium. So you want to see which way we expand out of that consolidation around equilibrium first. So if we were to use this up close candle here and we expand and shift below this as a change of the state of delivery, we look at this as an order block being placed around equilibrium and we expand away from that. We'd be anticipating us to retrace back up into the consolidation and continue lower. With that, let me get. Oh, actually, all right. I'll look at the pound. All right, so trading up into this weekly order block here. Yeah, honestly, yeah, I don't like this. Like, it used to be a lot. Like here, this year, this is a nice run, but even in that, we have back and forth, back and forth. I mean, this is a nice run here. I would be wanting to trade this, but this range here, no, I would not want to trade this. The main focus would be right down here below these lows. Got to this 2023 high. I just prefer us to come up and take it out going forward, but there always is a chance that we'll stall for one day right at it, and then the following days will trade right through it. So they'll see this as resistance initially, trade off, trade back through it. And yes, believe it or not, some fair value gaps are superior to the others. Alright, so notice we are finding initial support up off of the midpoint of the wick here. Not to our surprise. Worked in, or I guess we don't really need to work this hourly one in, but trade below it, that's good enough. I like it. Shifted above this down close 5-minute down close candle here. Still nothing to execute on. I'm just liking the initial support being found at the midpoint of this wick. I'd like to see this held, or at least one of the averages make a lower low right here. Let me check the dollar index. Okay, just kind of climbing higher still. We'll be looking at midpoint of this large wick left behind. And then, remember what I said? We always take the highest body, and that'll be our rejection block. So I'll make that red. And I'll title that RB. So just know that that is a rejection block. So the bulk of the liquidity resides above all these bodies here, not the wicks. 5-minute down close candle. The opening was shifted above. You don't really need the wick to be traded above to consider that a change of the state of delivery. The opening is enough. So we just traded above that 5-minute down close candle. Same on NASDAQ. And buy side liquidity resides right up here. Okay. You guys should already know by now why I say buy side liquidity is up here. If you watch a lot of my streams, you already know. But anyway, let's take our fib. Looking for a move above premium buy side. And then looks a little bit cleaner on NASDAQ, honestly. But equilibrium, I want to see premium repriced into above this short-term buy side liquidity. Everyone's trying to chase this down move. As soon as they make these highs, stops are going above those. And what's the algorithm going to want to do? Attack those. Alright, boom. I'm getting long right there. Oh, it slipped me up there a little bit. Anyway, getting long right there. Stop is going right here. And simply targeting these highs up here. Simple. So remember, I waited for the wick to be worked in and all the initial excitement to be worn down. Where is the next likely prey? Above these highs. That's why I got long, no hesitation. Looking for a move up into premium. Okay. And still staying true to that 5-handle stop loss. Okay, it actually is a little quarter tick above 5 handles, but that's fine. Let me take off the label. It's kind of distracting, isn't it? So yeah, I'm okay with a little bit of drawdown into the imbalance here, but anything past that, obviously, I wouldn't want to see. But for now, I like what I'm seeing. And then also, I'm going to bring to your attention to this inversion gap. So getting long in the inversion gap within anticipating this to be an institutional order flow entry drill. So guys, all you need is someone sitting here doing with you live and explaining everything real time. You don't need to buy a inversion fair value gap course. Now, that's not a shot at Ryan, but I think he's selling an inversion fair value gap course for $300. I promise you, you don't need to waste your money on that. You don't, like, there's zero logical reason as to why you should buy a course in 2024, in my opinion. I mean, it probably sounds like I'm biased because of what I'm doing here, but I truly believe the only real serviceable thing someone with experience could be doing in this trading industry is what I'm doing. That's the only beneficial thing at this point in time. All the information's out there, and if you're, you know, trying to become a successful trader, the only thing that's going to serve you a purpose is watching someone do it live, sitting down with you every day, explaining it, reviews, recaps, all that stuff every single day. I promise. Yeah, if you Demetrius says, yeah, if you don't understand liquidity, these PD arrays are useless. 100%, 1000%. If these markets weren't manipulated, if these markets weren't controlled and manipulated, I wouldn't have an edge in this market. I wouldn't. If these markets weren't manipulated or controlled, I would not have an edge in this market. Alright, obviously not moving how I want it to. A little bit slowly, but it's not gonna scare me out of anything. We're just gonna relax and sit here and wait. How's that? Sound good? Let's go to 5 minute real quick. I love it. Want to see this fair value gap act as a breakaway gap, and as it is now. Market open in 15. Yeah, I mean, on a normal day, I'd probably be worried about that, but I'm not worried about that whatsoever right now. I'm very confident in where my take profit is. Now, honestly, this is already what, 5 handles? Over 5 handles? Some of you can just take your profit right here. Take the $237. Now, if you're trading demo, I wouldn't recommend that, but if that's part of your model and you don't feel comfortable, fine. Just take the guaranteed profit and leave it at that. Nothing wrong with small profits. You get those small profits, and then you let time take care of the rest, and all of a sudden you have yourself a lot of money. How's that sound? See what Nasdaq's doing. Okay, cool. Once again, I don't want to see Nasdaq trade above the highs before ES does, so it's kind of like a race right now. But everything's staying where it's at. And notice where we're at right now. I can just close the trade, and this covers, well, $25 more, and that would cover 3 losses from yesterday. Notice how I took 3 losses and only lost $300. I'm only halfway through my trade here, and that's already covered. Come on, get up there. I know you want that buy side. I'm okay with it dropping down in here. Honestly, if there were any other scenario, if it drops down in here, that's where I would enter another contract, but I'm not going to do that here. Remember, you have to let the account build up first, and then you have more leg room to start risking a little bit more. And that doesn't mean over leverage. That's not what I'm saying. Don't take that and be like, oh yeah, well once I build my account up, GK said I can use the maximum contracts. All right, boom, right here. I can just close the trade right here, and this more than covers 3 losses from yesterday. Whoops. Uh-oh, little matrix glitch there. I was hoping they weren't gonna tell me there was a problem with Tradevate now. That would have been bad timing. I'm not sure if you guys remember on an old live stream I had on YouTube before I made this group. Obviously, uh, I believe I was trading the Nasdaq, and just mid trade, midstream, Tradevate just went out completely, and I didn't even see the outcome of my trade until almost the market closed. Actually, I think. Wait, Kyle, how long have you been with me for? Did your name used to be different? Did your username used to be different? And no way. Okay, I was thinking that, but I wasn't sure. All right, that makes more sense now. I love it. Oh, you're Alex on YouTube. Okay. All right, I'm recognizing you guys more now. All right, so I'm okay with. Obviously, I'm okay with this retracement here. This is where I would classically look to add another contract, but in this scenario, I'm not doing that. You cannot. It is never a smart move on the chessboard to be using multiple contracts whenever you're just starting out with a fresh account. You always want to start with minimum leverage. So yeah, very natural retracement right now. Nothing to get all excited about. I need this fair value gap to stay open. With that in mind, stops are going up. Okay. I'm gonna allow it to breathe a little bit, but we don't want to see us trade the whole way down here. All right, we did trade into that 15-minute gap, but I still would like to see us trade higher, obviously. So this is where I would look to add one more contract, or if I missed the move, or missed the entry down here, this is where I would look to enter with one contract. And then keying off of this imbalance low, okay? We're going to reference that. Yeah, Francesco, I agree. I honestly, I just wish I did it sooner. Discord, having everything here on Discord is just so much more convenient and just better for everyone. It's just, yeah, better in every single way possible. And it's funny. There's some guys I'm like, hey, I noticed you didn't cancel your YouTube subscription. I'm not doing anything on there. They're like, oh, I know. I still want to watch all the private videos you had, so I'm gonna keep it for a little bit. I was like, oh, okay, whatever. So obviously the temptation to put another contract in here was real. But once again, I'm not using multiple contracts until we get some breathing room on this account. Okay. Kyle entered. Good stuff. I mean, yeah. I mean, if you already have some leg room in your account, yeah, absolutely, this is an amazing pyramid entry. But for me, that's not in the cards right now. I'm trying to show you guys the real way to build up an account, not the not the influencer way. You ready for the hospital? What's going on? Nasdaq getting real close. So right here, this down close candle, we want to see this propel us up into the buy side here. So look what took place here. Look at that precision. We traded right down to the very high. So risk is close to none. And we're smitten to the take profit here. Alright, there we go. One and done.